Hey everyone, welcome back to Corporate Decoder, the place where we learn that sometimes even the most complicated financial documents can reveal a surprisingly simple story, especially when it comes to how much money a company is making and where it is going. Get ready because today we are diving deep into a very recent filing from Plug Power Incorporated. And let me tell you, this one involves some serious money, debt, and a whole lot of note-taking, literally. We'll break down exactly what they've been up to, why it matters, and what it might mean for the company's future. Before we dive in, if you are new here, make sure you hit that subscribe button. We break down these complex SEC filings into plain English so you can understand what is really going on. Also, join our Discord community linked in the description for more in-depth discussions. Alright, so Plug Power Incorporated, a company we've talked about before, has been busy. They've just completed what they call a private offering of convertible senior notes. Think of this as them borrowing a big chunk of money, over $431 million to be exact. But this isn't just any loan. These notes, called 6.75% convertible senior notes due 2033, have a twist. They can be turned into shares of Plug Power's stock under certain conditions, which is why they're called convertible. This borrowing was done through something called an indenture. This is essentially a formal contract between Plug Power and a trustee, which in this case is US Bank Trust Company National Association. This indenture lays out all the rules for these notes. Now, a key detail here is that these notes are what is called general unsecured obligations. What that means is that if Plug Power can't pay back the debt, the people they owe money to don't have any specific assets they can immediately claim. They're essentially standing in line with other unsecured creditors. This is important because it means these notes are riskier for the lender than if they were backed by something specific like a building or equipment. The notes are also effectively junior to any secured debt the company might have, meaning if things go south, those with secured loans get paid first. These notes come with a yearly interest rate of 6.75%. This interest you'll need to pay back twice a year, on the 1st of June and the 1st of December. Starting in June of 2026, the notes are due in December of 2033 unless they get paid back or converted before then. The really interesting part, the convertible feature. The holders of these notes can start converting them into Plug Power's common stock after a certain date, which they call the conversion limit end date. Essentially, they can choose to swap their debt for ownership in the company. The initial conversion rate is pretty specific. For every $1,000 of these notes, a holder can get about 333.33 shares of Plug Power stock. This means the starting conversion price is about $3 per S-share. Now, this is interesting because it represents a significant premium, about 40% over the stock price on the 18th of November, 2025, which was $2.14. This tells us that the investors buying these notes are expecting the stock price to rise well above $3 for the conversion to be attractive. Plug Power can't just decide to pay back these notes whenever they want, at least not for a while. They have to wait until December 2028. After that, they can choose to redeem them, essentially buy them back, but only under specific conditions. One of those conditions is that the stock price needs to be at least 130% of the conversion price for at least 20 days within a 30-day period. This is designed to ensure they're not buying back the notes cheaply when the stock is doing well. On the flip side, note holders have some power too. On the 6th of December 2029, they can demand that Plug Power repurchase their notes for the full principal amount plus any owed interest. This is also triggered if the company goes through something called a fundamental change, which is a significant event like a merger or sale of a large portion of its assets. The indenture also spells out what happens if Plug Power messes up. These are called events of default. This includes missing interest payments for more than 30 days, failing to pay back the principal when it is due, or not handling conversions properly. There are also more serious defaults related to significant subsidiaries and their debts, and of course, bankruptcy or insolvency events. If certain bankruptcy or insolvency events happen with Plug Power, all the notes automatically become due and payable immediately. In other cases of default, the trustee or at least 25% of the note holders can declare all the notes due. However, there is a bit of a safety net for reporting errors. For the first 365 days after a reporting default, the main consequence is just paying extra interest, starting at 0.25% and going up to 0.50% per year. This gives Plug Power some breathing room to fix those kinds of issues. So why did Plug Power do all this? Where did the money go? They raised about $399.4 million after fees. A big chunk of this, around $245.7 million, was used to pay off some really expensive debt. We're talking about 15% secured debentures. That is a very high interest rate, so getting rid of that is a smart move to save money on interest payments. They also used about $153.9 million to buy back about $138 million worth of their existing 7% 7% convertible notes that were due in 2026. This means they're refinancing some of their debt, likely getting better terms or managing their liabilities more effectively. The remaining funds are earmarked for working capital and general corporate purposes, which basically means everyday business operations and future investments. This whole offering was done without registering the securities with the Securities and Exchange Commission, or SEC, in the usual way. This means they relied on certain exemptions under securities laws, specifically Section C, our Rule Yausu C, and these exemptions are generally for sophisticated investors. Like qualified institutional buyers, this is pretty standard for these types of debt offerings, ensuring that the involved parties are experienced investors. Now, if all these new notes get converted, it could mean a lot more Plug Power stock out there. The filing mentions that up to a maximum of over 201.5 million shares of common stock could potentially be issued. This is a pretty big number and could potentially dilute the ownership of existing shareholders if the stock price doesn't go up enough to make conversion attractive, and those shares are issued. The filings also include references to several press releases. There was one on the 18th of November 2025, announcing the proposed offering, another on the same day about pricing, and a final one on the 21st of November 2025, confirming the closing of the offering. These are basically the official announcements to let everyone know what is happening. And finally, as with most filings, they've included an interactive data file that makes it easier for computers to read and process the information. So let's bring this all together. Plug Power has successfully raised a significant amount of capital by issuing new convertible debt. This allowed them to pay off some very high interest debt, which is a positive sign for their financial health. They're essentially refinancing at a lower overall cost. However, the fact that they are issuing more debt, even convertible debt, means they are taking on more financial obligations. The key will be how effectively they use this capital to drive growth and profitability. The conversion price suggests confidence in future stock price appreciation, but the potential for dilution is a factor existing shareholders need to watch. It's a strategic move to shore up their finances, but the real test will be in execution and whether the company can grow into its debt obligations and deliver on future promises. What do you think about Plug Power's latest financing move? Does it signal a step in the right direction? Or are there underlying risks we should be more concerned about? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up. And don't forget to subscribe for more content like this. And as always, check out our Discord community link in the description for more in-depth conversations. Thanks for watching, and we'll see you in the next one.